Welcome back to Upside Down Data. We need to talk about Render. So if you're not familiar, Render is a project that's really there to be a marketplace to connect people with GPU compute. The idea is that if you have GPUs you're not currently using, you can then sell that compute time to other people who can then buy it and make use of it. So obviously with AI being such a big hot topic right now, Render has done extremely well. And just today, as I record this, it's currently up 28%. In fact, at the high today, it was up as much as 41%. Just massive move to the upside. And it is now in price discovery. It broke above its prior all-time high to get to this level. So that's what happened. Now let's talk about where we might be going. So to do that, I'd like to talk about some of our models and what they are seeing with Render. So let's go ahead and start by talking about the shorter term outlook. Where might it be going in the short term? So I want to talk about our short term upside downside potential indicator, or UDPI. So this is one of our risk models we have on the channel. It cares about moves that play out over days to weeks, so shorter in its time horizon. Basically, higher values mean high risk, lower values mean low risk. And so you can see it does a really good job of capturing these dynamics, capturing these volatilities and these peaks, these tops, before we have corrections before going back down. It's really telling you what is the plausible upside versus downside potential and how are we sitting relative to that currently. So you can see is that right now we've really been moving up, and in fact we're now above 2 on the short-term UDPI. The scale goes all the way up to 5, that's the max, minimum is -5. And so that might suggest is that in normal circumstances, we might suggest that a local top might be near, like we saw over here, or like we saw, for example, back here in early 2021. The one thing that is notable, though, is that the situation's different this time around than it was back here. Back here, the AI hype was not nearly what it is now. We didn't have ChatGPT. We didn't have all these large language models getting all of this attention. And so in some ways, the narrative has very much changed for Render this time around versus last cycle. So that's where when I look at a short-term UDPI up above 2, it's certainly not spectacular. Obviously, you'd rather have been buying down here at -3 or over here -2, or even better yet, all the way down at -5 at the actual total bottom here. Seeing what Render did afterwards, anyone would have been very happy to be following this model back then. But since we're in that environment, I don't think we necessarily have to think that this level would necessarily act as resistance like it did in these times in the past. In fact, it might be more plausible for us to have a entire range of this scale to play with, basically, like we did through here. Now, there's no guarantee we do that, and so obviously we're getting at higher risk, and so that is something to keep an eye on. That any kind of remaining returns now will obviously be way less substantial than they were even just from starting here at a lower risk point. And we talk about this a lot on the channel. When you see a rally, you'd really like to see that rally starting from lower UDPI levels versus higher. When they're starting from higher levels, it might mean that the majority of the move's already in, and we're just getting that last leg up before maybe then we put in a local top. Whereas when you rally from these really low levels, that means that there is room to work with. So when I look at this right now, it not surprised me to see Render continue to be able to move up from here, but I do think that there's going to be a cap on how impressive it's going to be. I don't think we're going to be able to duplicate anything like this rally just immediately again right on top of it. I think we're going to have some more volatility in the meantime. So that's kind of what I'm seeing in the shorter term. I think there's going to be some volatility, but ultimately I do think Render, now that's in price discovery, probably has higher to go and could have a good amount higher to go in this market cycle before it actually would hit a top. I think it's really just getting started, breaking its prior all-time high. But short term, I think for this particular rally, we've probably seen the main meat of it already. But now let's zoom out, because in some ways we don't care about the short term. What we really care about is where could things go in that longer term perspective. What is the longer term outlook for something like Render? So to look at that, we can flip back over here to our long-term UDPI. So this cares about moves that play out over months to longer. So it's much more macro in its time horizon. And what's interesting with the long-term UDPI is it got actually fairly similar to this peak here that we had. Then we cooled off a little bit just around 0. And now we're moving back up to the upside. So this is also telling me is that a similar story to what we're seeing with the short-term UDPI, that in that longer perspective, we might be getting closer to a point where we put in a more notable local top. But again, of course, that's assuming that history is an indication. And if we really are in a this is different situation now for Render, given the AI narrative, maybe that could change. And maybe we really do have this entire scale to play with before we might think that things could slow down. That's entirely possible. But what it does suggest that at some point, kind of like what we did here, you'd want to see this slow down and for risk to reset again. A healthy dynamic in markets is where when you see risk go up, you then get opportunities to cool and then go up again. Cool off, go up again. We've seen that over and over again. So it would not surprise me at all to see that again here. So I think there might be some more room. But again, the main meat of the move is probably already in, especially when you're thinking longer term. If you're thinking about this as being a move, I think it's very likely that the majority of this move is behind us. Certainly the majority of this move is probably behind us before a more notable cool off time would likely come. So time will tell, we'll have to see, but that's what I'm seeing from this particular model. It not surprised me to see continued upside, but I don't think we should just necessarily make our base case be that we're just going to do this all over again. Not financial advice, should make your own opinions, but that's what I'm seeing with this right now. But then when we look at just the outlook, so kind of ignoring some of that and some of the volatility and how we kind of end up getting there, just which side makes sense to be on? Does it make sense to be bullish or bearish on render? I like to look at our forecast model. So this outputs a probability of how likely it is that the price of the asset, in this case render, will be above where it is right now 6 months in the future. So when you see a reading of, let's say, for example, 0.09, that's only a 9% chance of upside in 6 months. Whereas when you see something like this, 0.85, that's an 85% chance of upside in 6 months. And you see this model did a really good job of getting bullish at the bottom, getting bullish right down here, this fantastic accumulation range for render. And then we went off to the races, and then getting bullish again right down at this bottom here, and then getting bullish again, especially bullish again actually over here as well as we went off to the races. But it stayed bullish this entire time, just at varying degrees. So that's telling me is that even though the model is fluctuating in its relative confidence of it and what probability it's assigning, it's still very much clearly on the bullish side throughout this whole time. So until that changes, I personally see little reason to change my outlook as well. The data are telling me that a bullish outlook makes sense here. And as long as the broader markets remain bullish, then it seems very reasonable to keep this as being the base case. So again, not financial advice, make your own opinions, but that's what I'm seeing here. So in the medium to longer term outlook, a bullish outlook still seems quite justified looking at this model. So to wrap us up, I think render is a very exciting asset because it has that strong narrative fit. This idea of AI and the need for GPUs for everything AI related, for training AIs, for running AIs, all that kind of stuff. And of course, render does more than just AI, but that's probably the main narrative that is picking up on here. And it broke past all prior all-time highs. If we've seen anything in crypto before, when an asset can get past the prior all-time high and continue running further before it sets into its actual top. But of course, it is important to note that we're already up about 3,000% off the lows. And to expect a repeat of that immediately off these levels is probably unrealistic. And I think that's what we're really seeing in the UDPIs, that they're saying that upside remains, but we're probably going to get to a point where we need things to cool off more before we can put in another really notable leg up to the upside. And most likely, whatever rally we get there would not be as impressive as this kind of first half of the rally. Could still be very nice, but just kind of the way that the law of large numbers works, or with diminishing returns of assets, catching the bottom and riding it up is always going to be more profitable than catching it somewhere halfway through the move and then riding it up. That's just by definition the way it is. And so for me personally, obviously it's important to keep emotions in check. That's why I look at these models, because I don't want to just be FOMOing in because I see something up 30% on the day. I want to see the underlying data and see what they're telling me and how that might inform my decision relative to other assets that are in the space. So again, you should make of these data as you will, not financial advice at all, but that's what I'm seeing when I look across the render market. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us on X. A lot of updates for models and more over there. And also go to our website, partydigital.io, to see live data for models and more.